After the long Easter holidays, the US dollar index sank by several pips. What is it? The start of a downward reversal? Of course, it's too early to make any conclusions. Besides, important macroeconomic reports are due. The situation with the Japanese yen also remains uncertain. It's trying to strengthen amid the falling US dollar, yet its further trajectory is rather unclear. The Aussie is also unlikely to benefit from the correction of the US dollar. Find out more highlights from the Asian session in our video review. Our forecast for the US dollar index was mostly correct. The quote did not move from the indicated range this morning. It kicked off the trading at the level of 92.60, but then it decreased slightly. However, the average price level of the greenback over the past 200 days has not been reached yet. This is at the 92.45 level. Today, the US is going to publish monthly job openings data, which may determine the trading sentiment on the US dollar. If the quote consolidates below the average level of 92.45, then the upward movement may turn into the downward one. However, this may be false breakouts, so we need to wait for clearer signals. Such false breakouts occur quite often in recent years. This is why we should pay more attention not to the formal breaking of the line in one direction or another, but to the dynamics near this line. In this case, we see that the US dollar is losing momentum. In May 2020, when the US dollar index fell below the 200-day average, it triggered a strong sell-off of the US dollar. Traders should be careful and ready to open short positions. As we can see on the chart, the greenback weakened yesterday, which led to the fall of the dollar-yen pair. The price went under the line of the growing price channel. If today the US dollar wins back its losses, the pair made once as well. Besides, the target levels of 111.39 and 112.60 will again become relevant. If the greenback dips, the pair may reach the level of 109.37 in high notched on March 15. So today is a crucial day for the US dollar. We continue to monitor the situation. The trajectory of the Aussie is rather strange. On Monday, it rose by 41 pips following the growth of European currencies, yet it failed to hit the target level of 0.7665. We assume that today the quote will move downwards, and tomorrow this reversal will only strengthen. In a few more days, it's likely to sink to the target level of 0.7500. Today, the Reserve Bank of Australia announced its plan for monetary policy and kept the interest rate unchanged. However, investors will assess the results of the Reserve Bank of Australia meeting along with the US economic data and the Fed's decision on monetary policy. The Reserve Bank of Australia has decided to maintain a dovish stance. This may be the main reason for today's downward reversal of the Aussie. And that's all for now. We wish you profitable deals. See you in our channel with a new video in a couple of hours.